What is up, everybody? Welcome back to the Russell Journal. My name is Russell, and this is my journal entry for today, Monday, October 17th, 2022. I get clear on the dates from yesterday. I'd like to thank you all for joining me. Just to the beginning here, if you would, please make sure to like and subscribe to the video. Really helps me out with the channel, helps me out with the YouTube algorithm, so I appreciate that. Going into today, not a lot of stuff. A lot of sort of like some geopolitical things were really happening in the markets today, as far as where we ended up. Iran seems to be giving some military aid to Russia, which is unsettling, and I'm not sure exactly what it means entirely. There was a drone strike from Russia against Ukraine, and I saw 4 people died, and so it really, my heart goes out to the people in Ukraine and stuff as far as that goes. But what it really means for a geopolitical sort of situation with us and Iran. Iran kind of keeps poking the bear over here, and where we go with it, I can't really tell you what's going to happen. So there is some type of concern as to what's going on with that. At the same time, market closed up today a little over 2.5%. And again, going back to what we talked about yesterday, where we're probably in a place where you're going to see some short covering, some short profit taking. I know everybody thinks there's a lot of turmoil, and they think that the bears are just greedy and they're not smart, and that they've got them against the ropes, and they're just going to keep pushing it down to zero. Unfortunately, as far as what I know about trading, is trading doesn't work like that. We do have some concerns. Again, we get the 200 EMA on the weekly below us. We break below that and stay below it. That position will become a resistance point for the climb back up. But as of right now, as far as support is going, it has seemed to have held, and so at the same time, you'll see as we get in, we'll look at the Bollinger Bands. They tend to protect the bottom side of the market, and they keep it on the top side of the market. So we'll go in and talk about those things as we go today. We do get some earnings. We got Bank of America this morning. I did not see what their earnings report was, and I'm going to assume kind of with the market, the way it behaved, it was probably a bit of a mixed bag, where we're not just tearing up to the upside, but at the same time, we're not tanking. So again, like we talked about yesterday, high inflation environments tend to be pretty good for banks. Okay. So looking into tomorrow's really going to be interesting. Again, with the North American Home Builders Index, we get that and those numbers. That is going to be kind of important. The other thing that we have happening tomorrow after the bell, we get Netflix is going to be reporting earnings. A lot of eyes are going to be watching Netflix. Netflix has been, as part of that FANG group that Jim Cramer pushed quite a bit. It was part of, it's definitely part of the whole Silicon Valley like miracle story and things of that nature. The mighty Netflix versus Blockbuster kind of narrative that happened, especially in the early 2000s. So, there's going to be a lot of eyes how Netflix goes. So too will probably the NASDAQ. And just so there's a 27% weighting of tech stocks in the S&P 500. So if you're trading SPY, the NASDAQ is heavily weighted tech. NASDAQ the S&P is also, right? 27% of the S&P is tech. So you have a quarter of it. So any sort of flip-flop with that, and you will see a downside move in the indexes. So that's possible. Which when I go and talk about the trade that I have set up and I've got put on, it will kind of explain why I have that and why I'm holding it and things of that nature. Okay, moving forward, we have Netflix earnings tomorrow after the bell. That's kind of a big deal. Look into IBM and their earnings. Really see how these tech companies are going to play out. IBM, the reason we're really interested in what IBM does is because they're kind of the leader here. They're the ones going out first. They're not the biggest, right? They're definitely not the biggest provider of personal computers. I don't even know if IBM does a whole lot of personal computer stuff anymore. I haven't seen an IBM on the shelf. It's all been Dell and Gateway and Acer and those companies that do more with hardware. I have not seen. I know IBM. Most of their business comes now from like some type of government contracting. So it'll be very interesting to see how they perform and what they talk about. One of the things again we will see and we are seeing is like the personal computer space. Those inventories have been starting to rise. I've seen some stuff about that from Ira Epstein's been talking about that a little bit. Steve Van Meter's been talking about that. The other big thing to really note this week, and that last week something that I didn't really think about or didn't even really look into, but I've learned from Steve Van Meter, is last week was kind of the last week blackout of corporate stock buybacks, right? And going into this week, you're beginning to see those blackouts end, and companies are going to be allowed to buy their buybacks. Now, I had the scanner on today. I did hear a couple of companies. They're really small companies doing. They're going to increase their stock buybacks. So that's going to lend some support to the market in the meantime. So again, when we go and look and you see we're at the lower Bollinger Bands and we're off the 200 EMA, the idea that we would see some short covering through this week isn't a bad idea, isn't bad or anything like that. And but mostly it doesn't end the bear market. It doesn't end the bear trend. None of it has yet. We could possibly negate the downtrend. That could be possible. We could move into a no trend sort of scenario, which again is another reason why we'll explain the position that I go ahead and put on. So you can see we did from the chart here today, we do have quite a bit of green on the screen. We woke up with green on the screen, and we'll see that the momentum is rising. And if you look at the momentum, when we go look at momentum on the slow stochastic, you see that rising up. It pretty well does favor the idea that we're going to get a gap up. Now, I will go over a couple of technical things that I'm going to show you that show where and kind of how and when the crash might happen. Again, we'll look at it. So let's go ahead and jump into this right now. Let's go to SPY and let's go to the stocks. All right, let's start with the VIX. Okay, again, so not much change here on the VIX. Our trend is still up. However, I will need to look at this. I can't see, and I'm sorry, guys. My green screen is freaking out a little bit. I have to actually look at this. Okay. So zooming in on the VIX, we got too many indicate. Okay. All right, we're back. All right, so the thing you can see here is green candle. We'll see the green candle on SPY's daily here. You can see the red candle right there on the VIX. Very interesting thing. Again, pulling back. Really not super good for stocks until we get underneath this 18-day average, right? So our trend is up, our bias is up. You had a red day. Again, something I talked about is we're flying here in breakout formation, okay? So you've come up against this level. You're testing it a couple of times. It's not unusual to get like a big, massive pullback here. You want to see it come back, take out this low, and then turn around and go straight up, okay? And that's one of a couple. Normally, okay, so there's two breakout setups, right? Normally it stays in this wedge, it just keeps pushing up, pushing up, pushing up, and basically buyers through the bottom push it up through here. And as they push it up through here, what happens is anybody who's short selling, their stop loss is triggered and it pops the move all the way up, okay? Now, the thing about this that is really, really weird is the VIX is a volatility index, okay? It's not supposed to be, this is not backed up by any major security. It's only backed up by the derivatives that are in the options market, okay? So the thing here is, a lot of this isn't like, it's not like, you know, Black Monday where everybody just got so scared that they ran out and sold everything they owned. This isn't real fear creeping up. This is traders pushing volatility up, okay? This is not, uh-oh, we don't know what's going to happen, we're worried. So one of the things that you need to keep in mind, especially when you're looking for that capitulation, if you are trading for a capitulation type event, right, if you're going all Michael Burry on this, then you're really, this is not what you want to see if you're Michael Burry. This is not hysteria. This is a very orderly, very organized setup to a breakout. This is not what you want to see, right? And even furthermore, a break below this 18 and VIX bears are going to be all over this. You get the break below that 18 and they will be pushing this down super, super hard, okay? And I also guarantee you that anybody up here is probably writing some sort of like SPY or QQQ puts, and they're just selling puts left and right while you're up here, and then they turn around and they drive this back down, right? Then they go short on the VIX. So, so the thing is like, now, the thing that can happen, see, in the market, you've got two sides of every trade, right? If you go long, somebody else is going short, or if you're going short, somebody else has gone long against you. You buy a call, somebody sold you a call. That means somebody thinks the market's going to go down, where you may think it's going up. If you buy a put, somebody sold you a put, right? They're bullish on the market. If they're selling you a put, they're thinking, hey, this thing's probably going to go up, right? So I'm never going to have to pay out for this put that I sold to this guy, right? So the thing is what's happening here is you have a group of individuals who are bearish on the market, who are just trying to push this up. They're pushing up volatility, right? And they're going to try and run it right up over that line, right? In really harsh form. And so it's not typical. This is not typical. We're scared we're fear of our life, right? The other thing that is nice is as long as this volatility is up, your options are going to pay out way more than if the volatility's down. The premiums are going to give you more money. So now they are going to cost more too. Just so you know, your capital you'll need is going to be way higher. Okay, so going there, so let's get off of the VIX and let's jump right over to the DXY. Okay, so the dollar is, what is it? So the dollar's come down quite a bit today. It's broken down here below the 18. You can see that hasn't really stopped it. Again, it continues going up, right, in an upward fashion. And one of the things that happened today is we are starting to see a peak in interest rates on the 10-year yield, okay? They got up over 4%, and we are definitely starting to see them. So the two things that are really happening is you get above 4% on the yield, and you see the S&P and the Dow and the NASDAQ, you see them up on the same time. Normally you don't. Normally high, right? But basically what you have is a bunch of guys in the stocks are anticipating at this point a peak in interest rates on the bond side. Okay, so if there is that, then what it means is that that we're getting towards the point where all of the interest rate hikes that are going to happen this year are probably pretty well priced in. If we go back and talk about the cost of money there, stocks can go up once they've reached a point where they were worth whatever the cost of money said they were worth, right? So even if bond rates stay up over 4%, if they don't really keep climbing, stocks can start making a comeback, okay? So you need a stabilization in the cost of money, and you need to discount for that in your assets at some point. So right now, the bonds are kind of saying, hey, we're reaching our max level. And we may not come down, but we're definitely not going to go up that much. It's not going to be that much more of a crazy climbs up. Okay, so you have a lot of guys who are sort of thinking that. That also means that the cost of money should start to come down a little bit, and you're seeing that here. Now, again, this doesn't, and some of it too is because the stuff that's happening in Europe. So Liz Truss is really, they kind of castrated her as like her ability to have power. She, within like her first month on the job, is just, maybe it's her first week or something. That whole budget she put together, completely botched it, kind of made her party look like a bunch of buffoons. So, and not, given our, like how our economic system actually works, low taxes, lots of extra money, high growth in the system is not good. It's not good to be trying to grow while inflation is going on. You have to dial that back because growth requires spending. Spending allows for inflation. If you're trying to stop inflation, you have to stop spending, which means you have to stop growth for a while. So you're really at a position where, like, whatever she thought she was coming up with, whatever she thought she was doing, didn't really work well. It's not a good thing, you know. So anyway, so again, so with that coming back, by the way, the thing that you're going to see is that the Central Bank of England, the Bank of England, is going to rescue the pound, right? Which means that the European banks are probably going to start to rescue the euro, right? You're going to see those dollars strengthening, and it's going to make the value of these dollars a lot less, right? These dollars, and that's not bad, right? You need a balance, and they've been way out of balance. This has been way up, and the euro, the euro has been below parity, right? So really not super great. Okay, so we're going into the spot. So let's go through our process here. Okay, and this is where you can see it, and this is where you see that like things were getting kind of wonky, right, as to like what they're expecting. You have your trend is up, right? Except you're no trend. You have a lower high and a higher low back over here. Higher low, lower high. You have no trend here, okay? You've negated the uptrend. Your momentum is still up, but it's turning down. You never embedded with your momentum. So, you know, you're riding the dollar for a little while is over to the upside. And it's not quite ready yet for you to get all bearish on the dollar just yet. But it's getting close, right? Especially if you're counting, like if you're going to trade some sort of contract in currency on this, you're going to want to wait a little bit just to relax those premiums. Okay, the last thing, we're going to go to SPY. Okay, so we're on the daily. This line appears to 200. All right, so going here, again, a couple of things you can see. One, momentum is really, it is really turning up, okay? Okay, so your trend is still down. You've still got lower highs, lower lows, okay? Your trend is still down. Your bias is still down. You're kind of up. You're breaking over the 18. And your momentum is up, right? So all of this is going to count for a pretty nice bounce in the stock indexes. It'll be the same for QQQ. It'll be the same for IWM. And you can see here where the lower Bollinger Band kind of saved the day here, kept it from just completely crashing. And then again, if we go to the weekly chart and the monthly chart, you'll see you haven't got a lot of room. You need, especially on the monthly chart, you need to move that way. Oh, well, you need to move this way. You gotta come over here. Gotta get over here. So that's what? To the right. Gotta go to the right. Okay, anyway, so as far as all of that goes, that is it. Now, if you want to see, I'm going to show you, we're going to finish up here. I'm going to show you the trade that I have set on. Okay, this here is a straddle. You can see what I'm doing here. I go to this side. You can see what I'm doing over here. I've got one call, one put. This is a straddle. I'm straddling the same strike of 366. Okay, you can see I'm a little more red on this trade than I am green. Now I botched this trade earlier today where I botched this trade a little earlier today where I bought the 365 and not the 366, and I bought the wrong expiration date. So I switched this over, and so I have, if you follow me on Instagram, I've posted the balance there. I lost some of that money. There's a little bit more of a loss today. I'm pretty confident I will make this up. And I'm leaning really heavy towards the long side of this trade. I think you're going to break that 18-day, and I think you're going to squeeze a lot of those shorts. I think if you're somebody who's been looking to get short this market, though, this is going to be a great chance for you to find a really good short entry and make some money on the short side. So, as far as all of that's concerned. All right. All right, so just to go and do a quick recap of that. Again, we've got our trends up in both the dollar and, well, you got no trend in the dollar. You got bullish trend still flying in breakout formation for the VIX, but it does seem to be manipulated. It's not general fear that we're seeing. And SPY is getting ready to make its next move to make a leg up, right? It's needed to for a while. It's been pretty oversold. I think what you'll do, if you go back and watch if you need to go watch the episode I put on called The Kiss of Death, and it'll really explain to you, because there is a capitulation move coming, and it usually comes 2 months after you have the two parts. You have the kiss part where you kiss the 21 EMA. You have the death part where you take out the previous low on the monthly chart. You get 2 months typically of buying. You get almost a 9% spike in the indexes, and then you get your capitulation type move. So I'm more or less kind of thinking that you got October, November, so you're looking at a crash, like a Christmas crash, or crash early beginning of January, as far as things go. That is kind of what I'm thinking for, is like, if we get the capitulation move. This episode was, if you saw the thumbnail, it'll say 2 of 3 things is going to happen, and that's really it. Is you've got you've got one thing that kind of needs to happen, where we get a bounce. You need a bounce. If you're gonna crash at all, you still need a bounce. You can't crash from the lows, and the market's just not designed to do that. And if you think about it, anybody who is underwater, any type of asset, they're not going to be like, oh, it's at the lower Bollinger Band. Let me go ahead and just dump all of this into, let me just crash the market with all of my stuff, right? They're not going to do that, right? They're going to be smart. They're going to be selling. They're going to be liquidating. So they're going to wait for a nice big move up, and they're going to sell into that move up. This is stock market 101 stuff. This is stuff I learned in my first year. If you're dumping positions, you're selling into buying. You're not liquidating at the point that, that's not how you cut your losses. That is not how that works. So again, the risk may become too great. You need a point where that is. So I don't think it's going to happen until like at least January. It doesn't have to happen. Either way, you do have to get a bounce. Whether that's just a bounce in a bear market or whether the bulls go full bull on it, that bounce is that little intermediate thing that has to happen between capitulation or going back into a full-on bull market, right? And again, you need to keep in mind, you don't have to have a Fed pivot to bring back the bull market. At some point, rationality could return to all of us, and we may just start driving the market higher because we maybe actually have something of a strong economy. I don't know, I mean, it could, if you can present that story, if you can present that argument in a meaningful way, you can catch a bull rally. You really can, and you may even be able to go back into a bull market. Like, assets don't have to come down. So they can, and they're probably going to. I'm not saying they won't, but, so that's it. Anyway, I guess as far as everything else is concerned, make sure if you've enjoyed the video, like, share, subscribe, hit us up with all of those things. The Russell Journal is written, edited, and hosted by me, Russell, and we are produced with Social Media Shows. Our executive producer is Maria Pereza. Check out socialmediashows.com. They will help you out. Just produce shows quality like this. And until tomorrow, pretend I said some sort of catchphrase.